In this video, you'll learn how traders actually make money. And no, it's not magic or guessing. Trading is simply buying and selling at different prices. Let's break this down in the simplest way possible. A trader makes money when they buy low and sell high, or sell high and buy back lower. That's it. That's the core idea. Let's look at a simple example with a stock. Imagine a stock is trading at $100. You believe the price will go up, so you buy it. Later, the stock rises to $110. You sell it and make a $10 profit. That profit is how traders make money. But traders can also profit when price falls. This is called selling or short selling. You sell first, then buy back at a lower price. The difference is your profit. This works in stocks, Forex, and crypto. So traders don't care if the market goes up or down. They care about price movement. Now here's something beginners often misunderstand. Traders do not make money on every trade. Losses are part of trading. Professional traders focus on probabilities. They aim to win more than they lose over time. And they control how much they lose. This is why risk management is critical. One good trade doesn't make a trader rich. Consistency does. Small profits over many trades add up. And small losses keep traders in the game. Another important point is leverage. Leverage allows traders to control larger positions. But leverage increases both profits and losses. Beginners should be very careful with it. Many accounts blow up because of too much leverage. Successful traders focus on survival first. Then profitability comes later. So to summarize, traders make money in 3 ways. Buying low and selling high. Selling high and buying back lower. And managing risk over many trades. Trading is not about winning every time. It's about playing the long game. In the next video, we'll talk about different markets and where beginners should start. Thanks for watching.